Today, we're going to be comparing Nvidia in this cycle to Cisco in the cycle going into the year 2000. The reason we're doing this is because it seems like it is a very popular comparison. And so what I want to do is go through and see just how similar and dissimilar they are by looking at various metrics. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. I know we mostly talk about crypto, but I do want to go into some of the equityverse for a little bit, especially given this move by Nvidia. And what I'm going to do in this video is we are going to look at the price chart some. We're also going to go through a lot of fundamental metrics that can be used to try to evaluate a certain company. At the price chart for Cisco, what you will see is that if this is to be the so this is sort of that 1998 bear market where Cisco dropped. What's fascinating is after that drop from that low, it then rallied 683%. But what we're going to do is look at this on a monthly, because I want to show you something. What's more interesting is that from the 1998 low, from October of 1998, it rallied, and I'm gonna try to get this as exact as I can, so just bear with me for a moment. It rallied over the course of 17 months, and it ultimately went up about 700%. So a 696% rally, give or take a few percent, right? What's a few percent among friends? Over the course of 17 months, or about 517 days. Okay, so that's from that 1998 bear market. Now, Nvidia has done something somewhat similar in that we had this bear market over here in 2022, which also happened to end in October, right? Just like the one for Cisco did. It ended in October of the midterm year. Nvidia's bear market over here ended in October of the midterm year. And we know that Cisco went up almost 700% over the following 17 months. And then if you go look at Nvidia here, and I'm going to switch this over to a monthly time frame, just like we did with Cisco. From this low, you can see that it's been so far, I mean, just at this point, it's been 16 months, and Nvidia has gone up 605%. So again, Cisco went up 700% over 17 months. Nvidia is up 600% over 16 months. We know that Cisco topped out in March. Right? It topped out in March. And what was interesting about when it topped out was that it happened to correspond, right? It happened to correspond to the unemployment rate at it being at a really low level. And that's the thing that I frequently come back to, and I see a lot of people say, you know, how can this stuff ever come down when the unemployment rate is so low? When the market reaches a point where it seems like, you know, if it reaches a point where it seems like there's no way that things could get any better, that's ultimately what marks the top, because, you know, the reference point is going to be constantly something that is going to continue. Like, it's going to be hard to continue that growth if the market starts to think, all right, well, as we get further out, the unemployment rate will go up, you know? So 700% over 17 months. Nvidia is currently up 600% over 16 months. To give you an idea of what a 700% rally from the low would look like over 17 months, it would mean Nvidia going all the way up, and I'm going to get it actually at the same number, 696%. That would be between 800 to 900. What's actually fascinating is that the low that Cisco put in during the midterm year in 1998, what you'll see here is that it was around 10, and Nvidia, the low, was around 100. So basically, it's just a 10x difference in the price, right? So Cisco bottomed at around 10, Nvidia bottomed at 100, and then Cisco ultimately topped at 82, right? And Nvidia is currently at 780. So I know there's a lot of people calling for Nvidia to go to 1,000 or 1,100. I think 1,100 seems to be a number that a lot of people have in mind. I do wonder if it'll make it there. It certainly could. I'm certainly not going to try to stand in the way of it. These bubbles that occur, there's really no sense in trying to try to time the exact top. But with that said, it is interesting that if it were to repeat what Cisco did, it means that it wouldn't actually make it all the way to 1,000. And so perhaps there's a lot of people out there waiting for it to reach 1,000 or 1,100 to finally sell, but then it actually doesn't reach that milestone, leaving a lot of people holding the bag, right? Now, again, I don't know if it's going to reach that level or not. I want to be clear. It certainly could reach it, but I also have to imagine that with Cisco, there were probably a lot of people waiting for it to hit 100 to cash in on that sweet 10x move off the lows. And then ultimately it didn't do that. And then after that top, it then proceeded to dump about 90% over the next 31 months. And so I think that is something that, it's worthwhile to remember that could theoretically happen. Now, it could also happen on a different time scale, right? Like Cisco topped out in March. That doesn't mean that Nvidia has to top out in March. I just find it interesting that it seems like it's following a very similar tune, right? And Nvidia this month is up about 27% or so. You can see that as Cisco was reaching these highs, it was going up about 20% a month, right? I mean, this is 20%, and then a red month, or no, slightly up, but then 20% and then 17%, right? Nvidia has been doing something very similar where it's got, 15%, 6%, 24%, 27%. It's making a similar type of move off of that sort of that intermediate consolidation area. If you look at Cisco really closely on a weekly time frame, in order to understand how the actual market structure played out, after Cisco put in its final high in the 80 range, it then had a pullback down to that wick right there, which happened to correspond to 50. 50. Why is that interesting? Why is 50 interesting? Well, we talked about how it seems like it's like a 10x move difference. If you go look at Nvidia, the similar spot would be 500. And the reason why 500 is interesting is because that's exactly where it found resistance for a while. So what happens if Nvidia reaches some type of blow off top up in here, right? It goes up in here, reaches a blow off top, and then comes back down, and maybe it doesn't take that long, but comes back down, peaks up here somewhere, right? Comes back down to around the 500 range. That's basically what Cisco did, right? It came back down to around $50, $50 a share. It then had a dead cat bounce back up to $70 per share. And then it finally rolled over and the market collapsed. So looking at Nvidia, if it were to do something similar, it would mean, topping out sometime in the next few months. I don't know exactly when, I don't know exactly what price, eventually coming back down to 500, finding some support around that $500 range, bouncing back up to 700, and then rolling over and going back to more reasonable valuations, right? Again, doesn't mean that Nvidia won't be successful. It probably will be. It's just that eventually there has to be some type of larger cooldown period, I would imagine. I guess if you were to look at the monthly RSI, you can see where Nvidia is, and I'd like to at least look to see where it was for Cisco way back in the day to see if it was doing anything remotely similar. And you can see that it was. Basically it was just hanging out at relatively high monthly RSI valuations, and then it actually ultimately topped out at a monthly RSI of 93. Nvidia RSI on the monthly right now is currently 82. The highest it's gone, it's already gone higher than Cisco went because it went up to 95 over here. In fact, it almost looks like it's been putting in lower highs on the monthly RSI for quite a while. But that's another interesting way, I think, to look at Cisco versus Nvidia. I have to imagine that everyone that was calling for pullbacks throughout this entire phase was mocked and ridiculed. And then eventually, after all those people got completely washed out of the market, right, then the collapse began. But for a long time, it made those people look absolutely ridiculous, because I'm sure they tried to call the top every step of the way, and they just ended up being incredibly unsuccessful at doing so. Eventually they were right, in terms of, hey, like, it makes sense to get a pullback. And that's what is likely happening now with Nvidia, right? Like, it can climb that wall of worry until we see some type of larger macroeconomic headwind, for instance, the labor market or something starting to show weakness. But it's hard to know exactly the time frame on something like that. And so what ends up happening is that a lot of people, they look at the chart and they're like, you know, how do you look at this chart, right? For me, when I look at a chart like this, the first thing I do is I just sort of admire it and think about, like, how crazy of a chart that is to look at. And then I think, like, there's probably some people out there that have never bought Nvidia in their life, and they're deciding to do it for the first time right here, right? And in the short term, what happens is people buy these parabolic rallies, they get rewarded, and so they're sort of incentivized to continue to do it. And then eventually, when a pullback happens, it can be very fierce and quick, and leave people not really knowing what happened, right? I mean, this, you know, once Cisco finally got a drop that started in March, it dropped, you know, 40% over 2 months, right? Nvidia, as we showed earlier, Nvidia hasn't even had a 30% correction in over a year and a half. So if Nvidia starts to falter, that could be signaling faltering in other aspects of the market. The reason why I say that is because what happens during business, these cycles, right? What happens when we're in higher rates and whatnot is that these companies, and why don't we overlay US interest rates onto the chart? You know, what happens is these companies, that as you get into tighter and tighter monetary policy, these companies, they basically absorb all this liquidity, because no one knows who's going to survive a potential recession. No one knows who's going to be able to survive it. And so they just pile into the stuff that keeps on doing well, keeps on having this great cash flow, making a lot of money, because they say, you know what, even if there's a recession, so what, right? The company will probably survive because they have all this cash. And that's why I think a lot of people pile into these other names. It's the same thing with, like, the Magnificent Seven. Some of those from the Magnificent Seven have started to fall off, right? Like, some of them are not doing as well. And so after all of them have finally stopped performing, that's when sort of the larger turn comes. And that is where the sort of the lower market cap stuff goes down with the higher market cap stuff, but it doesn't go down as much as the higher market cap stuff, because the lower market cap stuff got sold off already, because no one wanted to buy it, because no one knew which ones were going to survive. When you get back to looser monetary policy, they're like, oh, that company survives. Let me throw my money into that. And that's often why, like, things like the Russell will finally start to outperform. Like, if you look at the Russell divided by the S&P 500, what you'll see is that it just continues to drop. Right? It just continues to drop. But look at where the Russell finally started to outperform the S&P last cycle. It didn't even start until May of 1999. But you can see that there was a lot of consolidation into only a few names back then, right? Only a few names. And then eventually we had a big bounce that turned back the other way. Now, right now, the current valuations that we've gone to are very similar to where we were back in 1990. I don't know if we're going to make it all the way down here or not. This is where the dot-com era took us. If we were to make it down there, it would imply the Russell bleeding to the S&P another 22%. But maybe we just bounce at the current levels, right? Maybe the Russell goes down a little bit more and then bounces. It's really hard to say, but that is something that is at least worth, I think keeping in mind, is that, you know, the Russell has, and maybe we actually should compare it to the NASDAQ over the S&P. If you look at, like, the Russell against the NASDAQ, I mean, it's already below where we were at the dot-com levels, right? It's actually below it, which is kind of scary to think about in some ways. In other ways, it's not that scary. maybe it's not, maybe scary is not the right word. In other ways, it makes sense because, you know, the companies that are successful in the Russell ultimately get kicked out of the Russell, right? If you're successful in the NASDAQ, you don't get kicked out. It's the unsuccessful companies that get kicked out. So it makes sense that over a long period of time, the Russell would bleed to the NASDAQ, which is essentially exactly what has happened. How much further down will it go? I don't know. But it has, you know, it's continuing to slowly push a little bit lower, you know, 1 month at a time. So that is the comparison that we've made between Cisco and the dot-com era and Nvidia this cycle.